Hello there, hello there. Hi, it's Forex, and I'm here to show you how to trade the rocket booster strategy. So I am using a broker called IQ Option, and that's the broker that I'm using. But I'm here to show you how to trade the rocket booster strategy. So the rocket booster strategy is very easy. The price has to be above the 50-day moving average, represented by this green line here, as you can see. And then the second thing is the 50-day moving average should be above the 200-day moving average, represented 200-day moving average represented by this red line here. And then finally, the price has to gap up. It has to be gap up the 50-day moving average and the 200-day moving average, as you can see here. So when it gaps up, then it has to retrace. So when it retraces back to the 50-day moving average, this is where you make the entry. And so right now I'm using a demo account, and as you can see, I have made the entry right here. So that's just how it is. It is very simple to trade. Also, you need to make sure the time frame is on the 1 day. The candlestick time period is 1 day, and then the time frame is 30 days, so that you can see exactly what is happening. Now we can see there's also news here. And the Federal Reserve Board issues enforced action with customers bank. EURUSD stabilizes amidst Fed speculation and absence of major economic data. USD JPY trades sideways above 147.00 as global recession fears ape. Rupee rises. We also have this one. So basically, we are USD to AUD rate reversal as China inflation picks up. So we are looking for related news related to the currency pair that we're trading. So we have this one, and then it says USDCAD exhibits volatility above 1.37 on weak Canadian employment. Okay, so USDCAD shows volatility after a weak employment report. Canada's labor market was squeezed and the wage growth measure decelerated in July. The US dollar declined on expectation that the Fed will cut interest rates in September. So we have more news here. So let's dive into the news. So the USD CAD pair delivers volatile moves above the round level support of 1.37 after the release of the weak Canadian employment data for July statistics. Now, Canada reported that the labor market unexpectedly squeezed by 2,800. Now, economists expect fresh addition of 22,000 payrolls against layoff of 1,400 workers in June. The unemployment rate rose steadily by 6.4% and remained lower than estimated of 6.4%. So the labor market, so basically the economic indicator, according to this news article, is based on the labor market. And so we have more data here. Now, as you can see, the risk level is below 2%. So ideally, you want to trade with a very low risk level of under 2%, which is what we have here. So we're still breaking down the news on the Canadian and USD pair. So how does the price of oil impact the Canadian dollar? Now, the price of oil is a key factor impacting the value of the Canadian dollar. Petroleum is Canada's biggest export, so oil price tends to have an immediate impact on the CAD value. Generally, if oil prices rises, CAD also goes up. As aggregated demand for the currency increases. The opposite is the case if the price of oil falls. Higher oil prices also tend to result in greater likelihood of a positive trade balance, which is also supportive of the CAD. So basically, we're just looking at what could the possible news that could cause this that's happening right now. So basically, what caused this drawdown here was the jobs report. So this currency pair is in favor of the US. So Canada actually posted actually positive negative job growth, and so also another thing that caused this crash was people are expecting the interest rates of the Federal Reserve to rise to drop. And so basically what's happening is that people who are holding US Treasury bonds, right? They are selling off their Treasury bonds at a profit, while they're still giving out 5%, right? Because if they're holding a Treasury bond that's giving out 4%, then they're losing money, right? That's less cash flow than they would have held, right? So ideally, the strategy is to sell their bonds while the cash flow is up and high. And that's basically the whole strategy, and that's the whole game. And that's what caused this to crash, because the Federal Reserve did release a meeting, and they were suspecting that next month in September, this video is being recorded in August. And so basically, they're expecting that around next month in September, the US Treasury yields are going to fall. So we can still look into more news, but I think I do have another good play. Let me see if I can find one for currency. Do we have Norway? No asset found. Okay. Mm, okay. I think we only have one currency pair. All right. No, that's fine. We only have one currency pair. So another thing that you can check out is we can check out the information here. And according to the information, we have more buyers who are buying this currency pair right now. We have a positive monthly change, a positive the year change, and a positive year to date change. Then we can look at the news, which is what we were looking at just previously. Then let's try to look. Harris says Fed is independent and will never interfere in its decisions. Okay. Signals no rate cut. Pound sterling. Show more. So we're just looking at the breaking news and as to why this is a good trade. Forex EURCAD Forex signal today plunges to reach support. US dollar limps on Friday. Markets await clues on the US economy. So we can look at this one here. As you can see, this is one of the currency pairs that's been impacted by the news. Now, stabilization in risk sentiment lends support to the USD despite lack of fresh fundamentals. Now, Officials paint an optimistic picture of the US labor markets despite slow job growth. Now, market adjusts easing expectation. First rate cut in September with slightly lower odds. The US dollar, measured by the US dollar index, showed sideways movement above 0.13 level in Friday's session. This comes amid stabilized risk sentiment and flat trading in US stock index futures following Thursday's rally, with the 10-year US yield remaining around 4% early in the day. Despite adjustments in market expectations for future monetary policy decisions, the US economic outlook continues to indicate growth above trend, suggesting premature market anticipation for aggressive easing. Daily digest market movers. Now, US dollar stumble as Fed officials highlight healthy labor market. Hints on the labor market were provided by Federal Reserve Fed officials who shared views that the market is not dire despite slow job growth. Bracken noted that businesses are managing headcount through attrition or slowing hiring, but not laying people off, indicating cautious but not panicked market behavior. Section reaffirmed that inflation is almost within the required range and that the strength of the economy will determine the policy path. Now, Goolsbee, however, warned that it's important to determine whether the job market cooling is a temporal or ongoing event. So the weekly jobless claim data, okay, this is very important, also helped calm markets, with initial claims coming in lower than expected at 233 claims. Sorry about that. All right, so now this is also very important to note, because the job claims, they're claiming that they came in lower than expected, right? So what you also need to understand about the job claims is that even though they came in lower than expected, okay, even if the job claims came in quote unquote lower than expected, the truth is they have increased on the year. So that's also very important to note. They tends to be this thing of misleading, where people think, okay, the job claims, you need to look at the job claims from a year standpoint. So beginning of this year, the job claims are around 200K, right? But now they have increased. So this could also be one of the reasons why this sudden drop. Right now, from this standpoint, we're looking at it from the weekly chart. So the dollar has fallen in the last 2 weeks, right? On the side, we're looking at the 7-day candlestick pattern. So these are weekly bars, right? So this is week one, this is week two. So we're looking at what caused this 2 week slump in the US dollar compared in the US dollar compared compared to the Canadian dollar. So we have more information here, but this is just to really get you into the groove as to why this move could be happening the way it is. But then again, as you can see, the rocket booster strategy is very easy. The price has to gap up right above 50-day moving average, which is this green line here, and then the 50-day moving average has to be above the 200-day moving average, which is this red line here, and finally the price has to be in a trend. All right, so as you can see, the entry should be on this moving average here, right? Because the market plunged to find support. So remember, it plunged and it found support on the 50-day moving average, which is what you are seeing here. And this is a good place to buy. So let's look at more news. Maybe we can find more clues as to what made the market crash. So we have a weekly outlook here. So, okay, all right, that's better. Remember, this is the entry. All right, so USD CAD spiked higher to 1.3946 last week, but reversed from there. Yet, downside is contained by 55D EMA, now at 1.3717. So far, initial bias is neutral this week. First strong rebound from current level, followed by a break of 1.379. Minor resistance will return near-term bullishness. Further rise should be seen to retest 1.39 high. However, sustained trading below 1.37 will dampen the original bullish view and bring deeper decline backwards to 1.3588 support. In the bigger picture, price actions from 1.39 2022 high are viewed as a corrective pattern that might have completed a 1.37 2023 low already. All right. So in the longer term picture, price actions from 1.46 2026 high are seen as a consolidation pattern which might have completed at 1.2. So basically, what they're saying is they're expecting this 1.4. This was a resistance level, and so they are claiming that in 2026 this was the high, right? So the reason why it crashed was because this was the resistance level of 2026. You can still check more info. What do you have on technical analysis on the daily pattern? So we can look here. We have the Fibonacci and we have the oscillators. Now, one thing I want to show you is when you are trading, and if I give you my watch list, the main thing I want you to look for in the watch list is the buy signal on the William percentage, and ideally the buy signal on the stochastic just as well. So you want to we want to look for these two buy signals here in order to get a fair view on the market. So that's what I look for. All right, I'm looking for a buy signal on the William and the stochastic. We can look at the economical events. So today we have a building pyramid, consumer inflation expectation. About it was 3%. 3-month bill auction. So consumers are expecting a 3% increase in the value of the US dollar. Okay, we have more core PPI year over year. We're expecting it to be 3%. And so we have an inflation rate year over year expecting it to be 3%, but it's showing us a reading of 2.9. Inflation is a very key indicator in the stock market. So I would love to thank you so much for for watching this video. Please feel free to rewatch it again. My disclaimer is trading is risky. You will lose money, so please learn risk management and profit taking strategies. As you can see, my profit will be at 70% and my stop loss is at 90%. I'd love to thank you so much for watching this video. Take care. Bye bye and bye bye.